We are back, and so is volatility in the markets as we begin 2025. We'll be discussing everything going on in crypto, stocks, and much more today on Money Never Sleeps. Join us today, everybody. As we get going, do us a favor, hit the like button, subscribe to the channel if you're new here. Remember, nothing Kevin or I say is financial advice, so please do your own research before making any sort of buys yourselves. Kev, happy new year. It's good to be back. The markets are open. They are doing their things. They are looking bullish once again. How are you feeling as we kick off 2025?
Doing pretty good. I'm excited for what January has to offer. There's a lot of things we can discuss on that, but I'm bullish as can be. The most bullish I've been in a long time. Not on everything, but certain stocks that I think have great potential in this month. So we'll talk about that today. But this is gonna be a fun year. I think we're gonna have a good time doing this show this year.
I think we're going to see a lot of volatility this year. I think that's going to be quite a bit of fun. And like I said, we've seen some positive movement in crypto to start the year. If we look back on the first, we've seen a nice little move up on ETH, on Bitcoin. Solana is back over 200. It's had a very nice rally the last few days. Started the year under 190, currently at 216. Solana is one that I think could really not lead the way entirely this year, but a lot of people are expecting it to be this bull run's version of ETH. And if it comes anywhere close to that, I will be a very, very happy man because I've accumulated some Solana. I've been staking and earning some Solana. Probably be selling some Solana here in a little bit, but I'm really excited to see what happens on that side of things. Will the AI boom continue? Will the Magnificent Seven continue to lead the way? Magnificent Eight, however many it is, will they continue to lead the way in the tech sector? What are you really focused on? There's not a lot of economic data today. We'll get into more of that next week. Next week is going to be a lot of jobs data with, job openings, private sector, unemployment report. Week after that, we get into more of the CPI data, and that will kind of lead into the first Fed meeting of the year later in January on the 29th. Right now, the expectation is no rate cut in January. That can obviously change based on the data we get. So kind of what has your attention as we begin the year?
Yeah, I'm probably just gonna fly through this because all of it kind of is interconnected, but things that we're looking at continuously. Obviously, the big one for me as I wait every Thursday night for the data to be released. That's the Bank Term Funding Program. We continue to wait to see that go to zero. Last night, we got the print down 23.67%. Not anything I should be really concerned about. It's down $1.37 billion. Once we get to zero, different story, right? And it's also kind of interesting how the Fed injected $500 billion into the reverse repo recently, so that's heavily skewed. But I think that they are taking that away at some point. I think it's after today that should be gone. So it's going to be a very interesting point in the market when all of those things are at zero or near zero, because it kind of shows you that liquidity is draining out of the system. But that is also kind of leading what I think the charge is on the DXY. The DXY, absolutely insane. Hats off to this thing, just going absolutely straight parabolic since October 1st of last year. It was trading at the bottom 100 flat, hit a height of 109.5. I mean, to be honest, this is probably why we were seeing the stock sell off for a few days there towards the end of the year. We're seeing a lot of people move into cash, high demand for it. I also think that the treasury market is also the reason why we're also seeing the dollar get a lot stronger, other currencies getting weaker. But this is not a good sign. We've seen the dollar get strong in levels where it's gotten strong is September of 2022. Obviously, we know what happens in October and November of 2022, both for crypto and the equity market. Not great. And, there's other periods of time where there's been spikes. Let's see, 2020, March of 2020, obviously everyone's sold off. You see the dollar spike. So we have to just question whether this is a preceding event, something that's happening before some type of major market move, or if this is something that is just, the event has already happened. We've seen the sell off. It was a very small sell off towards the end of the year, and now it's just up only. It's just kind of the questions we have to have. I stand more so that we haven't seen anything quite yet. And that kind of relates to why we're seeing the VIX being very volatile to start the year, even in towards the last few weeks of, or the last few days of December. You can see that we had this major VIX spike on the day of the FOMC, shot all the way up to 28 or so. And ever since, it's been stuck in this triangle, right? And we had a really good day on the VIX yesterday. It went right to the target, bounced right off of it. It wasn't going to break out of it. You probably see a bounce in the market the following day because you get close to this trend line. Every time you get to this trend line and you're very early in this pattern, anticipate that you're going to see a market bounce. That's just kind of the way that this VIX pattern has been playing out. It kind of always plays out that way. That being said, I do think that we will see a crush. The question is, how low will the crush go? I'm looking at somewhere between 1434 and on the really bad side, somewhere around 1250. That would be a really fast crush that would absolutely get a lot of people into the market, a lot of euphoria. That might be the last of the liquidity in the bank term funding program. Released at a week that might be pretty important for the stock market. That could be the week of the 17th, which is OPEX. It's also the last OPEX before Trump takes office. So a lot of things that we have to kind of consider going into that. And again, why all this stuff matters, because we've seen this in 2020. Bank term funding program, we could swap that out for the emergency repo. That went to zero. The VIX was absolutely coiling up at that point, and the dollar, it was on a downward trajectory at that point, but then we saw what happened after. So there's a lot of things that kind of coincide with that. Other things that we're looking at too. A lot of people aren't talking about this, but I think it's very important. Let me see if I can pull it up. Did I delete this shit? Oh no, wrong one. There we go. Head and shoulders pattern on the S&P. No one's really talking about that either. It's right at the top. We bounced off of this bottom part of the neckline here. Question is, does it kind of hold up for a little bit? Are we expecting some type of move down? Does it just fill this gap down here at like 57.83? We don't necessarily know. What I will say is that volume has dropped significantly. That could be just it's the end of the year. You have to see how volume performs next week. But you're not necessarily seeing the major buying pressure that you once were. You're seeing a lot of buying pressure over here. This now, maybe there's just not enough people, or the algorithms aren't, the machines aren't turned down to the point where it's like, okay, we're just going to keep buying. We're going to keep buying. Maybe their positioning for end of year and beginning of year is very different than, the start of 2024. So that's something we're
to jump in, because I've been, I saw the latest on, because I've been really interested to see, like, when does money start coming out of money market accounts and moving back into equities? And I saw another record high for money market accounts in the $6.7 trillion range. And so my thought is that there's a lot of people right now who are very content earning, 4.4, 4.5% in a money market, as opposed to like locking money up in a 2 to 10 year treasury. But they're not really, with that, like I mentioned, the Fed not expected to lower rates. So the money market rates still look desirable. Like, is that going to be outweighed by people having to sell and take profit? Like, there's just a lot of these dynamics at play here. And that's one where like the liquidity could come from to help push things higher. It's just a matter of, do people weigh the risk reward and think I'm going to get a better return on this money, in the short term versus just holding it and accumulating more cash that I can then move into at a later time. So I think that's kind of like a pseudo game of chicken we have going on right now in the market.
Yeah, and I don't think there's a better way you could have explained that. That's it really does come down to the risk reward, I think, at this point too, right? Are people going to get greedy and try and push for that little bit more, hoping that the equity market continues to push up? This pullback that we've seen in Apple kind of counterbalanced with this push up that we've seen with Nvidia. So a lot of people still believe that this market could go a lot higher. I saw a poll recently, or someone sent me a poll, and it was like 60-40 that people expect that the market is going to go up into 2025, which again, there is no necessarily, unless you follow the monetary system and you don't believe in black swans, there is no reason why you shouldn't believe that, right? And I totally understand why a lot of people feel that way. But looking at it, there is an argument that we could see, and this is a theory I'm also looking at too, is we have two major crashes that happen in 2025. And I don't necessarily mean like crash like 50% and then another 50%. What I mean is we could see a flash crash, like a little one that spooks a lot of people out of the market, and the market then from that base starts to climb a little bit higher. And then say something in Q3 closer to Q4, we could have the the bottom of the market crash that kind of takes us down. So 2025 could be a sideways for the most part, but in between, I guess, the end of Q1 and the start of Q3, a sideways moving in the market, which also makes sense, similar to 2008. But it could also just be the flash crash and the unwinds from the yen carry trade, from we could talk about real estate markets, people, unemployment's continuing to be an issue, a lot of money, a lot of people who are short on cash but high on debt that need to pay that off. So a lot of things that can absolutely play into effect here, and I think the money market is going to be something that we're going to watch continuously. Outside of that, I do want to touch on GameStop really quick, just because I am extremely bullish on it. And the two things that I want to point out, or there's actually a few things I want to point out, but we'll go through them real quick. These yellow lines that I have on here are the important dates. Now, we know he's been sending out the cryptic tweets. January 9th is a date that I think he was looking at for the market to start pumping on GameStop. That's the first yellow line. However, I marked it for January 8th because Jimmy Carter's National Day of Mourning is the reason why January 9th there will be no stock trading in the market. So obviously that kind of impacts the timeline of the GME pump. Other than that, we're looking at the week after, which is the final week of OPEX, which would be the Monday, January 13th, that until Friday, January 17th. That is the OPEX. It's going to be very interesting to see if we are starting to see shorts get covered. And if they do get covered, how violent is the move to the upside? And again, I think a lot of people still believe that retail is in on this trade. It is not about retail anymore. It is far beyond that. It's about the algorithm and how short people are on these positions. And just so people know, GameStop back in 2021 was trading, I think, south of $5 a share. It was something ridiculous, right? It was, let's see, back in 2020, my bad. Yeah, it was like $4.82. And the stock pushed up all the way. And again, this is adjusting for stock splits. It hit $120. Now, a lot of people probably didn't get out of their short positions, or they just added on to them. Price started going down again. It's like, okay. Our fund didn't blow up. Someone else's did, but ours didn't. I forget who it was. Gabe Plotkin or whatever his company was, or his hedge fund. I can't remember the guy's name.
Yeah. What was that?
Yeah. I forget the company name. I know it's Gabe Plotkin. That was the guy. Yeah. But Seth Rogen played him. And then we look at what happened in, in March of this or May of this year. It was trading at $10 a share prior to it pumping all the way to $64 a share. So again, the problem is the price of GameStop continues to push up. And if these people aren't closing out their shares and there's high demand for this and there's low float of shares out there, the price is going to push up more and more, and it's going to add more market cap because it's going to be more expensive to cover those positions. So this could be right now towards the end of the cycle of, it's been 4 years since it happened back in 2021. You could see the failure to deliver shares kind of being found, and you can see that there's going to be a major squeeze on this, and this is going to be a squeeze on people who are short on GameStop. So that would be the institutions versus institution, and then obviously just some retail players that are playing along. They're not the ones that are squeezing it, but if it starts to get really expensive and idiots start piling money into it, and I mean idiots in a kind way because I'm also in on this trade, this could be something that happens to destroy the derivatives market. It really can. It has the ability to do it. GameStop right now is just going to be something that I'm writing on. I bought contracts. I bought spot. I'm excited to see what happens with it. Maybe it doesn't go as high as I think. Maybe they cover their positions early and then they crush it like crazy. But this is one we're going to continue to watch. January 8th, probably get its tweet that night. January 9th, you might not see anything because the market's closed. But then obviously that into the first OPEX. Going to be fun, exciting time, I think, for the market. Other things could crash at that same time too, right? We don't know. Outside of that, let's run over to Bitcoin because this thing looks like it's still pumping up today. It's up like 15.5 right now.
Yeah, about 1.64%. Touched 99K, got rejected off of that. We're kind of seeing, we saw some big ETF outflows. I think that was I think that was kind of what we had discussed, like people taking profit early in the year, seeing, if you got into some of these ETFs early on, had a really nice return. And maybe it was a lot of people like, okay, I'm going to take the profit on this. I'm going to lock it up, pay my tax, whatever. And now we're kind of seeing that movement head back north again. So, where this thing goes next is as good of a guess as anybody. I mean, on one hand, you got Michael Saylor out there just trying desperately to get more rich people to buy Bitcoin. Like, I saw him comment on a Jeff Bezos tweet because Jeff Bezos was refuting the claims that he spent $600 million on his wedding in Aspen. And I just see Saylor comment, $600 million could buy a lot of Bitcoin. I'm just like, dude, you are just so thirsty right now for anyone to come buy your bags. Like, can you just stop it? So, where this goes next, I think is going to keep going up. I think that we're in, we're still in a bull run, and maybe this is like the disbelief phase of things. But what are you seeing in the charts?
You got to be careful is the only thing I think right now. And when I say careful is we don't want to see a lower high for Bitcoin, right? I think that would be the worst case scenario for Bitcoin, especially a lower high in January post halving year. Historically, we looked at it last show, major downturns in the market, right? We looked at one was like 28%, another one was like 36%. So what we don't want to see is we pre-pump early in the year, like first few weeks of January, or first few days of January. And then next thing you know, it's like, oh, we kind of topped and then we're at 85,000 or we're down at 76,000 out of nowhere. Again, that actually kind of probably would help my position on GameStop, not being selfish here, but you'd probably see a lot of the Ponzi money roll over into something else. So it's just something that we have to keep an eye on. But I just want to point out this right here.
Buddy, the Ponzi is in fart coin right now. Let's just call it what it is, okay?
Yeah.
I missed the fart coin trade. I'm never going to recover from that. It will haunt me for the rest of my life. But, we try to just persevere and move on.
Hey, man, there's money to be made in every way. You can't lose if you win, right? So take profits when you can if you do get into some of those. You also didn't put anything up, so you can't lose shit. Looking at this here, though, this is what we kind of want to see. We want to see if there's resistance. And this is just resistance given right now. If we're able to break above it, then great. And obviously, we're going maybe a little bit higher. But then you just have to look for where there could be resistance in the coming days. Stochastic RSI is moving up I think it's moving up fast comparatively to where it has in the past. Obviously, we've had some major fluctuations where it stayed overbought for a period of time. So this could stay overbought for a period of time, but it is moving fairly quickly. Volume is descending on Coinbase while the price is going up. And like I said, just in the back of my head, I know that there's no tether prints. I also know that there is a historical pattern where January tends to be a bad month after the halving year. So we're keeping that in mind. And then other things I want to look at are just kind of the alts. Same thing that we were talking about with, Bitcoin. This is XRP just right here. I just want to pull up this right here. I mean, if it's not able to break above some of these resistances, then, you're putting in lower highs. And this will be the second lower high that XRP has put in. Looking at Solana, I mean, yes, it's moving up. What you don't want to see is this rollover. And the problem is on the daily stochastic RSI, it is pretty overbought. I mean, it is overbought, but it's not completely. So this could go up a little bit more. Question is, does it hold this resistance? If we just go here, see if this is the resistance. I mean, you're kind of at the resistance. All these are at the resistance right now, which is very interesting. You'd want to see this break into the weekend or break really early as soon as possible, and then start finding like a back test of support and keep pushing up. It doesn't satisfy the fact that we are pushing up a lot higher if we are only putting in these lower highs. Again, ETH, nice move up, but then you also see that you're close to being overbought. And again, I know I'm being an asshole here on crypto. I'm sorry I'm not as bullish on crypto as I've been on GameStop and some of these other meme stocks, but this could just be an ABC pattern, and then you have a continuation to the downside. So things to watch on that regard are going to be seeing if we break these and if there is any demand that comes in. Now, if you see a tether print and the stock start and it's like a $2 billion print or something like that, then maybe it goes up and it breaks it and you're going a lot higher. Maybe the all-time high hasn't been touched yet for Bitcoin, yada, yada, yada. That being said, but historical patterns and trying to be reasonable about this and seeing where money kind of lies, I could see a rotation of capital out of crypto into some of the other things in the market for one last hurrah. But right now, everything seems to be pushing up. So just waiting for that confirmation. Outside of that, I don't have too much. There is a theory out there from Finance a Lot. Again, I always reference him because he has some of the best tweets. He does talk about a potential flash crash happening in the Dow. And he says that January 13th on would be the time that could happen. Now, the interesting thing is when I chart the VIX, the time that it would break out is actually January 9th. But then I said that probably around the 21st to the 24th of January, right around the time Trump comes in, that's when you could see the VIX start to be a little bit more volatile and more bullish to the upside. I think we get it crushed to that point. So there's a lot of things in January that are still undetermined. We do know that markets, if they do crash historically, it tends to be towards the end of January into February, into March, kind of like that Q1, or you start to see it more so in that Q3 into Q4. So there's a lot of things that we're going to keep watching. And again, I'm just kind of looking forward to the 2025, but I think we're in a fun time right now for seeing market moves and market volatility. I think there's a lot of opportunity out there. I think this is also going to be one where you're going to see a lot of people looking at the charts a lot more. I think a lot more volume is going to be coming in second half of this month.
All right. That's how we're going to wrap it up for today. Appreciate those of you who joined us. If you have not yet, like today's stream, subscribe to the channel, drop a comment if you are so inclined. We'll be back on Monday to look ahead to a crazy week in the markets again, job data, the latest out of the Fed, all of that good stuff. So have an awesome weekend, everybody. Stay safe out there, and we'll see you next time.
Take care, everyone.